The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. Good to be back. Nice break. Always a nice way to spend a little vacation there, just relaxing with family and friends. So, let's go straight to the market. Thank you, Steve, for a great 2-hour entry into my hour. That's the 11 o'clock hour. Steve's here from 9 till 11 in the morning, Eastern Time. I come on at 11 o'clock till noon, and just got a great program. What I'd like to do right now, let's just run the numbers, but I'm going to run the numbers because at the beginning of the week, the end of the last week of August, I believe it should be the last week of August. It better be. Yep, the last trading week of August, and a lot of things to look at. Number one, we've got the Dow chart right up here. This is the daily chart. Let's just run this down. Made a peak after the Chapman wave, 6 peaks higher from the low bar of 14,551 made in June. It went to, on the 2nd of August, 15,658. Pulls back in just 2 legs. Now, normally I'd look at 2 strong legs to the downside and say, hey, very bullish if you can get a buy signal from here. I don't believe from my weekly chart that you can get a buy signal. In fact, I would not be surprised if at the end of the month, that's on Friday at 4 o'clock, we're looking at a weekly chart that essentially is saying, I could have done it this past Friday, and that is to put a down arrow. I have to put it because all the technicals are incorrect. That's what I spoke about in my newsletter. The opening call goes out every single morning from about 6:30. You start getting charts, and what's important about it is that I demonstrate live every day the Chapman wave methodology. How you can go for successively higher peaks, how you count the peaks, what do you do when you get to a D, the 4th highest peak. On the way down, we look at troughs, a whole bunch of things that we look at, and we're consistent over and over. We look at the same things. That's why it seems to me that from the technicals, if you look at the weekly chart, that's the one in the middle, and this particular weekly chart is saying, hey, be a little careful because at this particular point, if you are looking at the Dow, you've got a completely different way of looking at the market than if you're looking at the Qs, the NASDAQ Qs. Why? Because the daily and weekly charts of the Dow are suggesting very strongly that this could be a digestive phase of time and price, but probably more time than price, with a chunk of the price being made at this particular phase. Now, I don't want to get too carried away because we've got to wait for the monthly charts to show, and the monthly chart is in leg D, having been repelled from the inside track, that red line there. It's a technique that I developed many years ago. Says there's tremendous support in the low 14,000s, but you know what? We don't even have to look at that because 14,613 is the 9-period exponential moving average, and the Dow is not closed underneath that number since it did that once back in May of 2012, went to 12,311 from the opening salvo with that 10,404 takeoff back in October of 2011 at 10,404. Once it broke above that month, once it broke above the 9 EMA, that's the only time that it closed below it. So we're going to be watching this very closely. Now, something else that's very important as far as I'm concerned, and that is here at TFNN, we have a number of different services. One of the things we look at, and one of the things that we always want you as listeners to participate in, is to look at the front page of TFNN. If you go to the front page, you'll see something that says, hi all, we're happy to make, this is the email that goes out, but in fact it says, TFNN will be hosting our first virtual trading competition where we will be giving away $10,000 in cash prizes. It is free to enter, and people have to sign up by Thursday, September the 5th at noon. That's really important. And the trading competition will begin the following week, Monday, September the 9th at 9 a.m. and will end on Friday, September the 13th at 5 p.m. and all trading for this competition will take place on the Nadex exchange. For more information, sign up page with all details. You can go right to the front page of TFNN and sign up. This is a big deal. I mean, we're really excited about it because there's just a lot of money being given away. That's number one. Number two is that you're really going to benefit by learning about the concept of capital preservation. It means that you can put up only the amount that you are prepared to lose, with a chance that throughout the trading period that you have chosen to use, hourly, end of a session, an entire day, whatever it is, it can go against you all day, and then like Friday, right at the end, there was this big spike to the upside with the Dow closing almost at the time, the indices closing at the high, and you'll be able to get your trade in and take your profit if you were long. So check it out. It is really the reason why we need to say Thursday, the 5th of September at noon, is because once the whole thing started, you can't actually enter. It's too late. Please check it out. Front page TFNN. That is exciting. So the Dow at 15,041 is up 30. After all the stuff going 14,480 down 1,200 points, this is just nothing so far. The resistance is at 15,081. And what I said to my subscribers this morning is that until the Dow closes above that, and even if it closes above that, the real area is the 15,200 area, because that's where the weekly chart of the Dow has strong resistance in the 9-period exponential moving average. But the technicals of the weekly are just terrible. The monthly technicals are still good. So let's go through the next one. S&P. The S&P trading right now, $SPX.X, trading at 1668, up 465. Where is it? It is above the 9-period exponential moving average. It is stronger. That was one of the weaker indices. But the weekly chart suggests very strongly this is probably going to be a peak F, with not a brand new peak A, which says it's really bullish. This is rather a peak F that says, hey, you've had a fantastic run. Now you should digest, and you could digest all the way from the 1668 level, go back to about 1604 maybe. That's the trend line, that uptrend, that dashed line support. So it's really an important digestive phase. At the same time, we are going to see whether or not you do get that rotation that I've been talking about from some of the most favored sectors into the others. The monthly chart in the S&P is still in leg D, up against that resistance. I suspect we will go into that resistance at some point, but not yet, not for a number of weeks where we're digesting. Now, here's the thing. The IWM had been one of the strongest, then it was one of the weakest. Now it's acting kind of nicely. It's just above a trend line resistance, and it says, hey, don't get too cocky about the short side, even though in my opening call we are pretty short, because there are signs that if certain things happen, you've got to respect that weekly chart of the IWM, Russell iShares, Russell 2000 ETF. Why? Because 102.43 is the key support, which it broke last week, then closed above it. Now it's starting the week off with a pretty nice gain, and you've got to look at this and say, at 103.69, up 52 cents, breaking that falling axe pattern, a close for 2 out of 3 days above 102.87. No, I would have to say I'm going to go for the trend line. 103.27 would be very positive. So and where would it break down? If by Wednesday afternoon, Thursday morning, it is below 102, it's breaking down in the H pattern. That's actually what I suspect is going to happen. Suspect and trades are two different things. You've got to have your little ducks in order, and you've got to put in your stops and buy stops, etc. Now, I had a question about the NQ. The continuous contract is in leg E. The comp index, which is the NASDAQ much broader composite index, is in leg D, because you can't have the low bar also be the high bar, and unless it's an instant restart in the Chapman wave. So the low of October 2011 doesn't start A. A starts after that. So this is leg D. Now, this is going to be interesting. Why? Because the Qs are acting really well. They're at 77.13 right now. The QQQ PowerShares QQQ Trust Series ETF. All it needs to do is go above 77.27, and that extends this leg to, I'm going to call it E in the daily. I'm going to have to call it C, G/C in the weekly, and that's really positive. It says that over a period of weeks, you could have a sharp pullback and still go up to leg D, as long as you don't break, it's the 77.13, as long as you don't break this uptrend line right here, and that's the support, and that's the very important support. This should become a propellant area if it goes to the 72.50s. A break below 71 would be very negative. At this point, I don't even have to talk about a break of 6 points. It's moving to the upside. The only break that might happen is a break above, and that would extend leg E in the monthly chart. So nothing wrong technically in the weekly or the monthly QQQ series. Stochastics at 89%. That's very good. The MACD is still expanding. Now we get to something that's very interesting. If you look at the IYC, which made, I have to call this a peak C. It's very unusual to break at all-time highs at a peak C in the daily, but it is a peak D in the weekly, and I really have no choice but to put a down arrow. And that down arrow says, all right, be careful. The lot at 106.49 up 50 cents. Got to be careful. But this is the candle. Any points in the next 3 to 7 trading sessions where it breaks above 109.14, the candle of last week, 2 weeks ago, that would be really positive. At this point, it's leg D in the monthly, and I suspect we're going to make a peak D with a lower September. That's the way I'm thinking right now, but we'll see. Go one step at a time. Now let's go to gold, GCZ30. Now, gold is in leg C in the daily. I could call this a leg F, but everything about it says 90% in the stochastic. The MACD is looking good. This is leg C, very positive. In my opening call, we happen to be long gold via an ETF, and it is doing nicely, of course. Actually, what's interesting is that we are also long a copper stock based on the fact that copper is acting very well, and that thing just took off, and it is up huge from just in a couple of days, considering that you've got copper. Let me just go to copper right now. I want to do the metals together. HG. Yep, copper is right now. There's leg D. Okay, that's good. And it's got the resistance right at the 200-period moving average. Finally got there. Wow. That was a struggle, wasn't it? This is the second buy mode, and it's leg D in the weekly chart. So now we've got a D in the weekly chart in copper, high-grade copper. But the monthly chart looks terrible, except if you continue, if you understand the concept of the H pattern, they could become a breakout pattern. That's the only way I would look at it. Now, let me just quickly give you an overview. I consider that the metals and copper and corn and soy, we're going to look at that in a moment, we can only call them counter-trend rallies at this particular point, but they are really strong. And as a result, I don't want to rush. This is the beginning of the week. It's a good time to reflect and go through these indices very, very orderly. I'm going to be back in a moment. We'll look at the TLT and other things as well. I'll be back. Basil Chapman, back from vacation.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Love to take your calls. We've got soybeans up 57 at 138.5. That is huge. Big move. Monthly chart is actually acting quite well. I'm just going by the continuous contract, and if you remember the other day, we were looking at this, and I said I had a buy signal, but I didn't know if it would go to a buy mode in corn, and corn is up as well. It's up 3.63% today at 513.5, and we were down here, I believe it was, in the 480s when that happened. So this is a very nice move. I had thought of doing something with that, and we tried this morning to buy a particular ETF, but I think we just missed it. It kind of gapped up, and I didn't. There's times when I really don't mind buying a gap. In this particular instance, I didn't really want to buy it at that price, so I don't think we got it. Now let's go to our first caller. We've got Lou in Nashua. Hi, Lou. How are you? Lou, you there?
Yes, I'm here.
Yes, good. How are you?
You look good. I was just wondering if you could look at the E-mini and see what direction you think we're going to be going in.
Okay, now this is very interesting. As we stand right now, the E-mini is trading at 1666 up 450 up 0.27. It is. I'm calling this a counter trend move based on a number of factors. It hit exactly the area that I thought would be support in the 1631 to 1630 area. It's bounced from 1631.50 up to, so it's about a 35. So that's a very good gain, 35-point gain. What's really important is that the weekly chart is slightly different. I'm going to show this chart now. If I don't know if you're looking at Tiger TV, but if I'm going to show right here, this is the continuous contract. So this is the E-mini September contract. Now look at this. There is the weekly contract, which is just slightly different enough to me to suggest that I'm going to stay with the cash and say that I think that we are getting close to some kind of a reversal. A, B, C. Yeah, it stopped right at the 200-period moving average in the S&P in the 120-minute chart. So, do you have a position? That's even better for me to ask you, because then I think I'd be... You don't. So your question right now is you would be prepared to go long if there was more to the upside, and you'd be prepared to go short if there was a lot of resistance coming up. So are you flexible, or do you have a particular bias at this particular time?
Oh, I'm just going by you.
Okay. So then this is what I'm going to recommend. Right as we're speaking, there's a chance, a lot depends, the volatility index is at 13.99. It's basically doing nothing. Let me just quickly get to it over here. I just want to double check. Yeah, the volatility index is underneath the 14s, in fact, it's the 13.99. Tried to spike, it couldn't do that, made a slightly lower low today. And I've got a leg B up in the 120-minute chart. After all the stuff that we've seen in to the downside, taking time, and what about 7%, 6%, 7%, 8%, depends on which index you're looking at. My suggestion right now is that either on the upside, I need to do this a little more carefully. I don't want to just make statements here without, yes, I wanted to see that. 1667 was the high at 2 this morning. And then it came back down, held the 9-period moving average in the 120-minute chart, is rallied back up, and it's being stopped at the 200-period moving average. So it went from the 9 to the 200, and 167.25 will start leg D. Now I've got a much better feel. My suggestion, I got two suggestions. One is I would not be trading the upside right now on the E-minis, even though there's a chance that we could go a little bit higher. I'm suspecting that we could go a little higher based on other factors that I'm looking at here, just very short term. And I would do this. If there's a trade, it's at 1666. If there's a trade in 1667.25, from that moment on, I'd be looking for a decline. I don't know if I'd play it on the short side. I'd have to be looking at a smaller chart. I'd have to be there right at that moment to see if it's worth it. But my suspicion is that just in the 1667s, there's going to be a reversal. And there's a chance that by the end of the day, we actually close down a little bit, which means that the S&P will pull back. If that happens, there are a couple of things that I would be doing. I'm just going to grab the a smaller time frame here, if you don't mind, 15-minute. Yeah, so that's A, B. I just need to do this B. Is that still B? Oh, it's a 15-minute. Yes, I need that. I need the break right now. I want to do a little bit of work. I'm looking at the 15-minute chart to tell you if there's going to be a trade to the downside and then a trade to the upside for the last flurry of this move going into Tuesday or Wednesday. I'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Editions Hour, and the Dow is up 34, S&P's up 5.3. It's interesting that the Dow in many ways has been lagging the strength of the S&P. So now we've got a call. We've got Lou in Nashua talking about the S&P. And as we were talking, Lou, it made that leg D in the 120 minutes that I was talking about above 1667, which is 1667.50. And now I can give you a little bit more of a sense of what I'm looking at. I'm not yet sure whether I even want to short at this particular time the S&P. Actually, I should say that in my opening call, we are short the S&P, but from the exact top. So we have a lot of leeway at this particular point. We also are short and long the Dow. So we have a very mixed portfolio right now, looking at the downside as being greater than the long side, but I wanted to ameliorate any rally attempt, which we knew that was coming, by being long the Dow in a 300% long position. So this is what I'm looking at, Lou. I would hold off right now. Yeah, but there's certainly the way buyers are coming in on every little dip, even this morning when there was bad news. I'm suggesting that over the coming, today's Monday, we've just started, we're in 2 hours into the first 2 hours of the week. I think that so tomorrow's Tuesday, then we get Wednesday. I would not be surprised sometime midweek if we start the process of testing downside support rather than the upside resistance. That's the way I'm looking at it. So I'm going to make a suggestion. I'm not sure about shorting it unless it's a real quick trade. My suspicion is that it's way better. It's at 1666. If the S&P can go down to 1661s, somewhere around between 1662 and 1660, I would nibble on a long position. And that might be a problem because it could be that we open down tomorrow, and that means it'll gap. So let me see what the next best entry would be. I'm just trying to be as safe as possible here. I think I know what it is. I would wait for a pullback. And if that pullback, because this is leg D, and the stochastic and MACD are not very good in the 120-minute chart, if that pullback sees a close by 3 p.m. underneath 163 to 161 support, I would not do anything. I'd hold off. And tomorrow morning, any pullback, I start to look towards nibbling on the long side of the E-minis, only because I think it's going to make a leg B rather than just a single leg A, and then reverse down. That's my thinking as it stands right now. So the two things that can happen. Either right as we're speaking here at 1666.25, if you want to put in a short position with, I think, a 3-point stop, that's $150. I don't think that's unreasonable. So that's what I would do right here with a stop, just 3 points above where we are, make it 1669.25, 1669.50. And that says that, okay, you're expecting a pullback. And I would lower the stop the moment it goes, if it does, goes to 1663, I would lower the stop to possibly my entry point, because at that point it should continue lower to the 1661-ish area. And then I would start looking for a possible turnaround. And the reason why I'm saying it is that the MACD in the daily, in the weekly chart is quite strong, and the stochastics at 93%. So it looks to me like any pullback should be transitory. It should just be something like 8 hours to 10 hours in time, so that would cover into tomorrow morning. And then I'd be looking at a long position. So maybe you can call me tomorrow morning again, and we'll look at it to see if that's the opportunity to get in, if you are correct, and if I'm correct, and it does pull back from here. So I hope that helps you. So that's Larry. So that's Lou in Nashua. We were looking at the E-minis, and I hope he was able to pick up on that. And now a couple of things. Oh, before I forget. I'll be doing Larry's show straight after this. I'm going to spend a little more time on the commodities and the currencies then. Just briefly right now, I'm going to tell you, because we don't have the board up, I'm just going to tell you the dollar is just in a trading range. Unless the dollar can close on Friday above 82.30, it's at 81.40. Hey, that should be no big deal. Unless it can do that, I just think it's stuck in this trading range, in the EUR-USD. The euro currency pair also is stuck, but it is at the higher end of its consolidation, with the stochastic at 67%. There's a kind of a failure here, but the price is holding. So I don't see anything yet, a breakout. Let me give you the breakout levels. The euro breaks out above 1.34511. The dollar breaks down under, it doesn't really break down, but it starts to weaken under 81. But if the dollar takes out 80.75, closes under that, that's very negative. And that says that the dollar, which I thought had a chance just to rally if this market was going to go lower, if this little trading range that it's in starts to be broken to the downside, then you're looking at 80.45 as being really important 200-period exponential moving average resistance. Then 81.78 on the weekly chart is the, that was support. 80.45, and the resistance 81.79. I'll go through it in greater detail in Larry's show. Now let me just, I wanted to go through a couple of things. The TLT, trading up 33 cents at 104.62. This is a nicer chart pattern than any of the other upside moves that I've seen in the TLT. It is in leg, did that recycle? Let me just double check. 113, 17, 16. That's going to be interesting. EFGA. There's no H. So this has to be considered a C. All right, we're going to consider that a C in the weekly chart. Now, I had said to subscribers in my opening call this morning that unless the dollar, unless the TLT can break into the 106s, they say 104.65 right now, this is suspect. Everything's suspect with bonds at this particular point. But I'm looking at a scenario here that says, on a shorter term basis, there could be a move that says the TLT, let me go to bonds just to cover it at its root, which is at trough F. Yeah, that's better. That's trough F. I like that. Good. Has a chance now with a stochastic. The MACD has given a really huge divergence between being strong as the price has gone to lower lows. The stochastic actually is also stronger than it was way back in June when the bonds were up at the 133, 134 area. So to me, this is saying you've got a chance right now for bonds to rally. Now I'm going to go to something else, which I think is really important. I have to get out of this chart here. I'm going to close this workspace, and I'm going to go to this workspace here, and you're going to see something that you probably don't see anywhere else. Why? Because it's the way I set these things up with the Chapman wave methodology. Look, there could be a peak D in the 30-year yield right here. 39.30 was the high. Was that the actual high? I think 39.30 was the high last week in the yield. 30-year yield, the white background, a black background with a white price. The gold is the 10-year Treasury, not the bond, Treasury note at 28.46, not 64.46. Let me just double check. 28. 20 gold last week. 29.20. I knew it had gone higher. I just didn't remember what the price was. 29.20. And now this is something that's very interesting to my eye. I can't give you an economics background look at that. I can just tell you that as far as I'm concerned, this peak D, potential peak D in both the 30-year and the 10-year is saying to me there could still be an E. It could still go higher because almost every other time we went to a D, but every other time we've gone to E's in the 30-year. So I can't ignore that. But if the yield goes to 37.23 in the 30-year, that's 3.72, let's call it, or 7.3, and the 10-year goes from 27.93 down to 27.53, 2.73%, and the 5-year, you see the difference in the black background, the difference between the white, the price of 39.30 at the high, 29.20 and 28.64, which I think is wrong. Let me just double check. Wasn't updated. So this is 17.24. I don't know how it got. Oh, wrong yield. 27. Oh man, 17.24. I believe I said 17.24. That's 17.24. That disparity between the different yields is very unusual. It got rather wide. And that's something that I like to monitor very closely. And even more important than monitoring it, look what happened over there when they got to that particular stage. So I'm going to be watching this. Can the yields come down? Can money fly back into bonds as the safe haven? Wouldn't that be ironic in a counter-trend rally? Because I believe that we have made a major top in bonds. Well, that would be very interesting. Why would it be interesting? Because if that happens, it says that the market could be a little weaker a little longer. But I cannot take my eye off the VIX. The VIX, the volatility index daily, went to a peak B. It should have held very nicely here. At this particular point, that peak B high of 16.56, we should be very close to it, even with a counter-trend rally. So I'm watching the XIV, which is the inverted yield, VIX index. I think it's going to fail very soon, and it's going to start coming down. If that XIV, which is trading at 27.56, goes underneath 25.56 at any point in the next week, this market is going lower. And the volatility index should then attempt to break into the 1660s or higher for leg C up. And I'm expecting that to happen. But we'll go one day at a time. And at this particular point, we've got a counter trend rally going on. The suggestion that I gave just moments ago about possibly shorting the ESU. I hope Lou was listening and heard my commentary. I have no idea whether it's going to work out exactly, but at this particular point, there's a potential double top in the 15-minute chart, and that double top says that if it breaks into the 1663s, there's a real good chance that at least the wick of the candle of the at 9:45 on the 26th, that's 9:45 today, of a low of 1659.75, there's a chance we could start heading towards that. Now, I need to do a couple of things. One is, I just wanted to talk a little bit about the signals that I got. Just to explain, I had a question over the weekend, wasn't able to really get to it with emailing back the particular questionnaire, and this is what I'm looking at. When you go through in the Chapman wave methodology, when you are looking at peaks, when you get to the 6 highest peak, especially at peak F, there's a song. The song in the Chapman wave methodology goes like this. The market goes up, the market goes down. Supposed to buy at the low and sell at the high. So you buy at the low and you sell at the high. But that's easy to say. But you know what we tend to do? We buy at the high and we sell at the low. Then you go snap, snap. Chapman wave is what you need. And the reason I say that, you buy with the Stoke and the old MACD. That's a great help. You can use just price patterns, which I use sometimes if I'm just looking at the naked charts without anything here. Maybe we'll do that a little later on, or maybe tomorrow I'll take just a blank chart and I'll show you the waveforms. But look at this. From the S&P at 1560.33 on the 24th of June, you got a turnaround. You got the stochastic going from under 30%, trying to turn up, under 20%, I'm sorry. You went right to, what was the low? 19.25. And you got the MACD just starting the fast-moving average turnaround. So, Chapman wave is what you need. You buy with a Stoke and the old MACD. You follow the price and wait for a peak. High highs is what you seek. So here we are. We've got peak A. Pulls back. You got peak B. Peak B starts 1 penny above 1620.07. You go to 1620.08. And it starts leg B. Pulls back. You go 1 penny above 1626.61. It goes to leg C. And that's exactly what it does. And that's called a floating ladder. It floats until it makes a peak. And then it's called a peak. And at that point you get a peak C. And that peak C says 1 bar down, 2 bars, and the third bar breaks to the upside, goes to peak D, and then a peak E. And then it goes, the MACD is stochastic pullback. Now, this is interesting because the song itself says, you follow the price and wait for a peak. Higher highs is what you seek. The wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. Suddenly it goes to E and F. Look, that's what it did. Went to an E and then went to an F at 1709.67. A bell rings so loud it can make you deaf. So what you going to do, which way to go? You sell at the high, and you buy at the low. And look what happened. We went short right there, almost the top tick. Right at the next day at the opening of 1709.67 high. So now we're waiting because we're in this position that we're to trough D. Now this is a counter trend rally. I'll be back and we'll talk about the next phases of this particular market. Be back. Dow is up. 26 S&P's up 4.5. 877-9276.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Whoa, time flies. We're in the last segment of the show, and I'm going to be doing Larry's show. Larry's away, and I'll be doing Larry's show straight after this. We'll go through different, we'll go through the golds and silvers. In fact, we'll go through different gold companies as well, and silver. We'll be looking at that. This is what I'm looking at in terms of the S&P. I believe this is a counter-trend rally, that the tide has changed. Certainly the daily, the tide has changed. The weekly, everything about it says that the MACD is turning down, stochastics at 75%, but the week has just begun for this particular week. I'm suspecting that we're going to break at some point fairly soon. We're going to break under 1639.43, the low of last week, and that'll take us down in time. And a chunk of the down move has been done from 1709.67 high to the lower. Let me type that in, 1639.43, 1639.74. And that low says that if it's taken out anytime up until the first week of September, then there's a real good chance that we will be going to test that dashed line, somewhere on the dashed line, the 1610 to 1604 area. That's my scenario at this particular point. Now, if we take out decisively the gap down day of the 15th of August with a high of 1679.61, which is also the opening price, we close above that, I have to say, you know what? We've used up time, and now we're just rotating. And I could be wrong that we're going to go even higher, which is one of the reasons why we have long positions and we have short positions. And yes, in one particular case, it kind of negates the one and the other. But that's okay, because one is a short. It's for subscribers. I have a short-term trade on, which is working very nicely so far. And so let me just finish up with. There is a pattern I'm going to draw in right now. One trend line makes a big difference. Look at this trend line. It goes like that. Now, a trend line is not a channel line. A channel line is two parallel lines. A trend line is just a straight line that touches certain very important, some people use the inside of the body of a candle. I happen to like the wicks. And if it cuts into the body of a candle, but not cuts into the open or close of a candle, that's fine. I prefer not to go into the body. And this one says very clearly, the S&P closing about 1678, I have to consider that's going to be a big factor. 1610. So Art from New Hampshire asks, Basil, if we go down and take out the 1610 area, how do you see gold reacting? Now, let me just quit. I'm going to spend a little more time in Larry's show, commodities and all that, but I'm going to just do this right now. In the GLD, now the GDXJ, the juniors, has acted really superbly. So let's go to the GLD, which is just the SPY trading, the S&P, the gold index, S&P 5, why am I doing this? It is the Spider Gold Trust. That's what I meant to say. The Spider Gold Trust. That says that at 134.60, there's a chance it could go over the next week or two to the 140.32 area. But the 138.47 area is resistance in the 200-period moving average of the weekly chart. That's number one. And number two, I've got this as leg C up in the second buy mode. And the second buy mode says, yeah, the high of 135.24 on Friday, and today's 135.22. This could be peak C. If it's just a shallow C, I suspect it's going to go up. And where would it test? It'll probably test this trend line resistance, which is at 137.22, which coincides with the high of 137.60s back on the 6th of June. So you can see there are a number of factors. Now, the stochastics are holding well. So we are long the gold, not the GLD, but a gold ETF, trading on the price of gold. I like the action. It's doing well. But my suspicion is that this is a counter-trend rally. I have not yet got any signals to say this is a major buy. It can happen, and we happen to be long, and we'll try to stay long as long as possible. So I'll do a little bit more work in the next hour. So Basil Chapman signing off for the first hour. This is my Tiger Technicians Hour, and I'll be back for Trade What You See, Larry Pesavento show straight after this. Hold tight.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.